Monday, Wednesday, Friday with you.
It's actually good that everybody underestimates Indians, including Indians themselves.
India's combined financial savings right now is $12 trillion. In the next 20 to 25 years, we will add another $80 to $90 trillion to take it to $100 trillion.
India has the opportunity to become what we call the application factory for AI.
We want India to become the AI engineering capital of the world.
I do feel that you are going to see a lot of multinational consumer companies out of India in the next 10 years.
If you're young, you want to roll up your sleeves and go on the ground, I think it's the best time to be building for Indian manufacturing right now.
A lot of people asking what's the open AI movement for crypto, and I think stablecoins have proven that.
It's also our 50th episode at the Offline Network. Hey there, listeners. It's Wednesday, January 28th, and we're streaming our 51st episode live. Hey, Utsav.
What's happening?
Apparently, they've launched a card which is called the Bharat Yatra card,
Yeah, available on
which
LinkedIn.
is the one card to rule them all.
Yeah. Yeah, multimodal. So I think it should be exciting. I haven't looked into it, but something that should, be a convenient factor for a lot of people. One interesting tidbit as well. Google bought DeepMind yesterday, 12 years ago, January 27th. How far we've come.
Yeah.
I don't know if you saw that Anthropic CEO's blog post. He writes these extremely long blog posts where he makes a point about the future of AI and positives and negatives. And I think it's a phenomenal piece as well. Have you had a chance to read it?
I have, yes. I also really liked a question that Vlad Tenev, the Robinhood founder and CEO, has asked, the Anthropic CEO, which is like, what you're saying is important, but what's also important is that we address the economic disparity this is going to cause, because Anthropic's next private round is going to happen at like 350 billion. And Vlad's view is that these companies aren't going public till they are maybe worth over $1 trillion. And so where do retail investors get exposure to these companies that are going to concentrate incredible amounts of wealth?
But do you think retail investors should have access to these companies? A more philosophical question at this point, when the risk is extremely, extremely high?
Yeah, good question. No easy answer. Maybe, again, there's that question of how early is too early. If you're not early enough, you lose out on a lot of value creation, but also there's that risk. And which is why they're trying to tokenize the assets now. And, once the company is de-risked beyond a point, at least there's no mortality risk left anymore. You can seek exposure.
Yeah, 20 billion round, which is oversubscribed. So I think interesting to see, but closer to home, Shadowfax listed on the stock markets today. It's now the second largest player in the logistics space, B2B2C model.
Well, the IPO windows open again.
Yeah,
the class of 2026.
Class of 2026. The stock is, of course, had a hit today, 9% down, just because I think market is realizing that 50% of the revenue is concentrated in Meesho. And I think you mentioned that 75% comes from the top 5 clients of theirs.
Top 5, yes. So B2B2C model, and therefore Meesho and Myntra and Ajio, I would imagine, like all of these people in the fashion commerce space.
But I think what's phenomenal is that the ESOP pool, which was worth 250 crores in 2024, is now closer to 900 crores and 3.5x growth in just the 2 years. So I think it's phenomenal outcome for the employees, and many of them will again become investors, and some of them will become founders. So all in all, I think the innovation flywheel keeps on churning in our country, and which is, I think, great to see.
This is good virtuous cycle to have. One very interesting thing these guys worked on along the way also was address intelligence. So, if you've looked at e-commerce packages in India, some of them have the most endearing but comical addresses. People will say, behind Pink Temple or Blue Building, 2nd floor. And it's really hard for anybody to be able to tell what that means. And these guys have built a system that is able to do that. If somebody writes house number 202 and somebody writes 2nd floor, house number 2, it can tell the difference. And also, pin codes are not enough to go by. And so they've, in a sense, created this entire an overlay of of like, hexagonal grids over India's map, and create a very complex mapping system, which they've also promised to open source at some point, which will be very, very
It'll be
helpful.
interesting. There was a company called Zipper back in the day, which was trying to do this at scale. Create like unique zip codes for every particular house, so that when you enter that exact zip code or that alphanumeric code, you literally land up at that place. I think it's needed because the RTO returns or return to origin orders, or the reverse logistics cost for many of these logistics players is pretty huge. If it's open source, then I think anyone can contribute to this, improving the logistics.
And if you make like 10 deliveries to the same address, you can keep reducing the marginal error after every delivery.
But Kunal and Rohit, Titan Capital sitting on a 158x return. They invested.
Yeah,
Mamaearth, Urban Company, Shadowfax, IPO hattrick. I mean, they have like 5 unicorns in their portfolio, and it's just insane what they've done. They've done 125 rounds, leading 60 rounds, and I think the unicorn hit rate is insane. 70 lakhs invested, 8 crore valuation in 2015. That stake should be worth over 100 crores today at the IPO. So congrats to them.
And also, I think because they were mostly investing personal capital at that stage, and they're not constrained by a fund, life cycle or anything. They also hold pretty much in perpetuity, let these assets compound.
Yeah, so that's why they're not selling as well. All right, let's welcome our first guest, Abhimanyu. Welcome to the show.
Thanks so much. Thank you for having me here.
Hi, Abhimanyu.
Can you explain to our listeners what your business does?
Sure. So we are Robin Hoods of climate change. We take money from the rich polluters and end up investing that into projects that are doing good for the planet. But technically, we are a standard and registry. We certify, verify, and issue carbon credits.
Okay. And what are carbon credits? People who are hearing about, we've had the founder of Alt Carbon on our show as well. He explained it in his words, but just as a quick recap, what are carbon credits?
Carbon credits are actually quasi-financial tool. 1 ton of CO2 either avoided or removed by a particular project is equal to 1 carbon credit. So if you're driving an EV vehicle and your vehicle removes 1 ton of CO2 or reduces, or you're doing something like a biochar and 1 ton of CO2 is sequestered by the biochar, that's equivalent to 1 carbon credit.
And is there any laws and regulations around this in India, where we've seen many climate companies come around? I think even the Reliance family with the Vantara is getting into carbon credits, and there was chatter about a carbon credit exchange coming up in India as well.
Yeah. So primarily there are 3 ways to save the world. One is put a carbon tax. The other is you exchange emissions. There's no real project happening. In these 2 cases, this is where the government is involved. It is called a compliance market. The third way is you actually do projects which generate carbon credits. It's called a voluntary carbon market, where there is limited government intervention. What the Indian government is coming up with is a compliance market carbon trading program. This should happen anytime now. Yeah.
And could you explain what the difference between those 2 regimes is, Abhimanyu? Compliance and voluntary?
Like I said, in a compliance market, there is no real project that happens. Either the government will put a cap. So suppose government says you and me are industries and we can't emit more than 10 tons of CO2. And you do 11 and I do 9. You can come to me and say, please issue me a carbon certificate for this 1 ton extra in your quota. So we're exchanging or trading emissions. This is called an emission trading scheme. The other way to do is like I said, put a tax, which Sweden does it today. If you emit beyond a number, you pay a tax. But trading is more incentivized because it allows for innovation, it allows for scalability, but no projects. So this is a compliance market. In a voluntary market, real projects happen which generate real credits, which are certified and verified by standards and registry. The Verra gold standard and now RenewCred, the work that we are doing, the first ones to do it in India, we have standards and registries. So a project will come to us, issue the credit, and this credit is bought by buyers of credits.
Does that mean you ordered them from an emission standpoint before you issue credits?
That's very true. So we look into the entire life cycle of the project. We verify the claims made by the project. We see if the project was not happening, then what else was happening. And for that delta, we issue the credits. And buyers buy it for 2 reasons, either because of regulatory requirements or because of altruistic reasons. Take, for example, Microsoft, they say we won't just reduce our current emissions. We'll go back in the history and reduce all the emissions we have done so far. So that's how a voluntary carbon market works.
And as a registry, are you any different from a depository? I'm just trying to draw an analogy here because credits, shares, is there any analogy there? Any equivalence?
Yeah. So that's a good comparison. The only problem or the only difference between a share market and a carbon credit market is a carbon credit retires. So when a company or an entity or an individual also for that matter reduces their emissions via carbon credit, they will come to a registry and say, please retire this against our name. Whereas a share doesn't retire in perpetuity. So that's the difference.
Can redeem it, but yes, but I get what you're saying.
Yeah,
And
yeah.
you identified 5 failures in the carbon markets, right? You mentioned that in your comms as well. Lack of trust, opaque data, slow verification, high costs, and fragmented accountability. Can you break it down for us? Maybe some examples?
Yeah. The number one problem is it's an organized market, but the verifiers tend to be super corrupt. They sanction projects that were not even really there in the first place. The famous example is there was a big agroforestry project, saving the forest project in Zimbabwe. And when a newspaper did an audit on it, figured out 90% of the project was just on paper. The entire project was fake because there is no automation, no digital verification happening. The second problem is in the current environment, the suppliers of carbon credits, people who are doing good for the planet, end up paying a fee to get the carbon credit. And this fee is not less. It is anywhere between 10 lakhs to 1 crore in INR terms. Now, startups and SMEs don't have that much capital. The third problem is there are two kinds of project, nature-based and non-nature-based. The problem with nature-based projects is suppose I set up a forest of 100 trees. I don't know the quality of soil. I don't know the quality of seed. I don't know atmosphere. I'm just guessing how much carbon it was I've saved. And the fourth problem is nobody knows what a carbon market is, who to go, who to consult, what price point are credits issuing. So these are four problems that we as a company, RenewCred, is solving for. Also, India, 400 million credits are issued. India issues close to about 17% of those credits annually. Yet this is not really talked about in India. It's just happening in the last year or so. So we're a big supplier of carbon credits, and it's a fantastic means of sustainable finance also, because projects get money to survive.
Price arbitrage. Why is India supplying 17% of this? Like, is it just because of land mass, just because of our natural resources, or is there some price arbitrage at play here?
Both the things, landmass for sure. The local ground level capacity building in India is quite drastic. These are NGOs that end up being project developers that set up forests, that set up biochar. And second, obviously, is a drastic price arbitrage. The capex of setting up these systems is far more lower in India compared to, say, European Union or America. So both the things come at play. Yeah.
And what's the difference between carbon and green credits, Abhimanyu?
So carbon credits is all about emissions. It's a globally accepted trade. There's some structure to it. This has been around since Kyoto Protocol in 1997. So this has been around for 27 years now. Green credits is something that just the government of India came up with about a couple of years ago. They wanted to incentivize more kind of products, so water, doing simple things like setting up a small forest in your home, etc. So those are green credits. Green credits can't yet be monetized. Carbon credits can be monetized.
And as a developing country that is yet to industrialize, how do we prevent the developed economies from penalizing us for something they once did?
Yeah. So I have a different take at it. I say instead of penalizing them, let's get their money invested into green projects in India. And that again can happen through carbon credits. So today credits are not consumed in India. They are broadly consumed in EU 55% and then America. So like I say, it's a mean of sustainable finance to get the money back in India.
And as a final question, Abhimanyu, you've recently raised just over 4 crores. Tell us about the round and what does the future look like for you in 2030?
Yeah. So this round was broadly to create those algorithms and methodologies that will issue the credit, and obviously our technology also. The idea is to do about 30 projects this year, which would give us a supply of about 250,000 credits. It will also make us EBITDA positive in about 15 months from now. So any other future round will be for the growth of the company rather than survival. And we will be rolling out one methodology or algorithm every couple of months. So reaching that stage where we are catering to not just India, but all the projects coming out of Global South. We just registered a project in UK, another in Nigeria. So becoming a global player for carbon credits is the idea.
That's amazing. As you hit many of these milestones in your future, please come back on the show and talk to us about them. Thank you.
Would love to. Thank you. Thank you so much.
Pleasure having you.
All right, listeners, we'll shift to our next guest now. Anurag, welcome to the show.
Hi. Thank you so much, Utsav. Thanks, Dhruv, for having me. Lovely to
I
be here.
love the name of the company, For Real. What does it do?
Yeah, so we're essentially building the new age factory outlet equivalent for the online commerce space in the country, right? This is predominantly to help brands liquidate their aged inventory in a manner that doesn't cannibalize their brand equity as it does today. So that's essentially what we're building, bringing branded value commerce to the
What
forefront.
kind of brands are they? Just fashion brands, or can they be like any kind of apparel or different kinds of shoes, or like what kind of brands are you working with currently?
Yeah, so we're essentially pre-launch right now, but the idea is that we'll be going live super soon with the lowest hanging fruit first, which is the fashion and apparel category. The idea is then to extend it to horizontal categories in non-apparel spaces as well, including home, beauty, personal care, lifestyle accessories, electronics as well, because pretty much any industry that we pick up, it also has problems of dead stock / non-moving inventory pertaining across. So yeah, the idea is to become that horizontal player, but again with an initial wedge with fashion leading the space.
What were the alternatives before your platform? Like, what are the alternatives now? On NH8, we see these factory outlets on the left. Many of them have shut down, I think, because of some compliance issues. But what were the alternatives before?
Yeah, so liquidation today, Utsav, happens predominantly through two methods. One is the online discounting that we see that pretty much anything, any destination that we look up to, either it being brand.coms or larger marketplaces, have some sort of sale periods running across the year, right? That is one destination / platform that brands utilize to liquidate some of this inventory. Once that is also not delivered the ideal amount of throughput for those brands, eventually this inventory ends up in the offline lot or the bulk buy ecosystem, which essentially is the unorganized equivalent for the general trade ecosystem that exists out there. There are retailers who will pick up your inventory on a cash and carry basis, but brands end up realizing very low values for their inventory, right? Somewhere in the ballpark of 5 to 10% of usual selling is what brands end up realizing. And this is at month 8, month 12, at times month 24 of inventory holding. So a lot of cash flow lost and a lot of value also lost in the meantime.
Can you help us quantify that maybe with an example, Anurag? Like how much of your working capital could you reclaim by working with For Real?
Yeah, absolutely. So that's a great question because even a lot of brand partners that we speak to, unfortunately, are not able to quantify this. So what we've seen across the board, particularly with fashion, that there's a 22.5% top line unlock that remains jammed in this particular dead stock on a rolling basis. Again, this is at a yearly level. And at about bottom line level, I think this apportions to anywhere between a 2.5 to 3.5%, including the added bottom line from the new collection launches that brands would then, as a function of unlocking timely cash flow, and also from lower inventory holding and operational costs as a function of, again, holding lesser inventory by virtue of liquidating it timely. So that's the level of delta that we're looking at stuck for brands on a yearly rolling basis.
And the people who come by, are you,
sorry,
the people who come by, are you only going to make like a value proposition to them, or are you also going to appeal to them on things like responsible consumerism and so forth?
Yeah, so I don't think India is there yet as opposed as far as consumerism in terms of their responsibility as consumerism and sustainability per se. But I think what appeals to the Indian consumer psyche is value shopping and branded value shopping per se in this particular case, which is pretty much the biggest call out that we see in the country, right? Pretty much all top of funnel across the board for .coms as well as marketplaces is led by discounting. What we're essentially doing, Utsav and Dhruv, is introducing more context to this discounting, right? For the past 15 years, consumers haven't been told as to why a certain product is being made available at the 60-70% discount. Suddenly, now we're bringing transparency to that ecosystem, saying that this is, yes, last season merchandise. You might not get the latest and the greatest out there, but whatever you're getting is of the highest quality and is being made available at the best value possible because it is sourced directly from the brands.
Will you be working with D2C brands as well, or this value proposition appears more feasible for brands with like extremely large inventory or dead inventory?
So this is actually valid for both use cases, Utsav, because no matter which brand partner that we speak to today, right, pretty much everybody has debt stock and the liquidation issues thereof pertaining. Even so, particularly worse so for the online first D2C brands, because they actually don't have the offline, the ecosystem that we discussed, open to them, because their merchandise does not get a lot of salience in the markets that it is usually liquidated in. So very high propensity towards a D2C ecosystem because their entire brand is built online, and they're forced to deep discount on their primary channels of sale, as opposed to having a separate channel that speaks to value consumers and protects their brand equity at the same time. Though the larger nationalized labels, they have their own supply chains set up, including factory outlets like Utsav you mentioned. They've in fact moved towards the Ghitorni side of the metro rail in Delhi. There's an entire market very close to the Bangalore airport as well, and pretty much every city out there has its own equivalent of that. But that also doesn't ensure that 100% of merchandise for those brands also ends up seeing the day of light of day rather, for inventory like this. So yes, the magnitudes of the problem statement are different for both of these brands, but it still pertains across the board.
Interesting. So, I mean, you've spoken to us about, I mean, I'm guessing the pitch to all of these brands, I think, is very, very clear. But what are your go-to-market plans? What does the new fundraise do for you?
Yeah, so the new fundraise, essentially with Titan Capital coming in, that has actually given us a lot of ammo to one, build out the platform, the technology platform that we're essentially in the rollout phase of. And then on the consumer side, this is to drive the early consumer adoption as well as test out consumer love for a proposition like this, as to how effectively can we cut the clutter in terms of bringing the factory outlet narrative front and center to the end consumer. Because unfortunately, we're in a space where this part of commerce hasn't kept pace in the past 20 years. Pretty much everything that we see is all is a premium for a convenience, right? The value shopping space, particularly with respect to branded goods, hasn't kept pace. So that's what we're
Anurag,
bringing.
do you have a sharp, vivid definition or description of your ICP, or is it more broad because you're still in discovery?
We're focusing predominantly towards the tier 1 audience who's aspirational but doesn't have the pocket capacity to partake in these branded purchases on a regular basis. So these are folks that usually would reserve branded purchases for end of season sale periods more than anything else. So this is an access unlock story for them, right? So we're bringing similar merchandise being made available all year long. Doesn't go to say that we'll have brands with us all year long, the same brand all year long, but the consumer, every time they walk into For Real, they'll find something that works for them at the value that works for them.
And Dhruv was mentioning, I think these European outlet villages and the malls that you have just outside the city, maybe a 1 hour, 2 hour drive. So we're trying to build the online version of that for India.
Precisely. And in Europe, outlet village is a thing. In the US, there are multiple players. There's TJ Maxx, there's Nordstrom Rack, which have done phenomenally well in this space and have actually just captured value branded shopping as a space and owned it for more than 50 years now.
What have you learned from them, like these global players that you mentioned?
Yeah, so I think the name of the game in this, Utsav, is capital allocation in a manner where you don't burn through a lot from a customer acquisition point of view, and how do you build a sustainable business, because this inherently is a very low ASP and a low margin business. So your supply chains have to be set up in a manner where there is money to be made for the brand partners who are liquidating, and for us who are enabling this practice for them as well.
You will be taking inventory risk also, right?
No, not in our case. We won't be taking inventory risk. The idea is to do this in a manner which is inventory light, because again, just to add a little more nuance to the discussion, right? This is inventory that is typically already aged 12 months. Let's say I block let's say 10,000 products for a brand, for a set brand, and I only see 80% throughput. Suddenly that inventory becomes 14 months old, which is a very bad place to be, right? It gets worse for the brand, and it is even more a larger problem for brands to solve suddenly, because then they have the longer tail of long tail which remains, which becomes increasingly notorious to sell through. So brands should have that flexibility to see throughput for this inventory on other channels parallelly as well. The idea is to become that de facto partner, but again, it'll be a function of time as to when we get there.
And what do you do about returns in this business? Like
So
the
again,
customer get no returns?
Absolutely. So a bunch of our products are going to be marked as non-returnable by adding that extra value being passed on to the end consumer. And this we've seen play out beautifully well, not just on value shopping platforms such as a Meesho, but also on the larger marketplaces like Myntra, where consumers are okay to take that additional pain of not being able to return a product in exchange for a added value that is being passed on. And again, one of those other pain points that we're solving both for the brands as well as the consumers is bringing transparency to this entire practice, right? We're not in the business of overshadowing and providing user delight just at the cost of the business itself. The idea is to set expectations straight with the end consumers from the get-go, that you won't get 7-day return windows, you won't get 14-day return windows. A bunch of these products might also be non-returnable, but what we absolutely guarantee is that you won't get this price elsewhere on the internet, that's for sure.
And congrats on getting Titan Capital. We were highlighting their wins. So how was that as a final question? Like, how was your interaction with them? What was the pitch? And who did you get connected with there?
Yeah, I think Chirag was the individual who led the entire charter for us at Titan Capital. Fabulous individual, true believer in the space that we were chasing from legit day one. And very interesting conversations that we ended up having with both Kunal as well as Rohit, given their backgrounds of having built Snapdeal to the place where it is today. They really understand the consumer pulse in the country from a value shopping POV, and they had a thesis. They really understood that this is a problem statement that they've been seeing, and this is Kunal's words verbatim, that we've been seeing this problem for the past 18 years. We were waiting for somebody to actually come forth and solve this in an organized manner.
Snapdeal, right? I think a lot of their commerce is value commerce as well.
Precisely. So they understand that consumer behavior more than anything else. And one of those rare conversations that I had during that time, speaking to a bunch of VCs, where I actually did not have to create a lot of context around the problem statement. They knew the category, they knew the problem. They in fact had suggestions and ideas of how we could execute this better, and that's why we were lucky enough to actually close out the fundraise process within 4 days of starting it, in fact. And that's the level of conviction that they came to the table with in terms of the problem statement. Of course, we're super lucky to have them on the team backing us.
Awesome, Anurag. All the best as you launch, and me and Dhruv will definitely log in and check out. So drop us a link when you're good to go. Cheers.
I'll do.
Thanks.
Thank you so much. Thanks, Utsav. Thanks, Dhruv.
All the best.
Cheers. All right, listeners, our final guest for the show today. Let's welcome Shiv. Shiv, welcome to the show.
Hi, guys. How are you? Good to see you,
Good,
sir.
good.
Hi, Dhruv.
Nice.
Good to meet you. The first
Very
time,
nice
I
to
think.
meet you.
For the kids at the back. Hoop.
They're going to be coming in. If they come in, I can't stop them. So they've been told to be on good behavior, but you know how it is. Or not
If they
yet.
do-
I think your child is still too young for you to understand this age. Yeah. So
All right.
If
So
they
we're
do
going to
end
ask
up
you
coming,
some.
I was just going to say, if they do end up coming, they'll be the first kids in TUN.
Yeah. All right. So let's have a fun chat. You're in between chapters now, but before we move on to what's next for you, why don't you explain to our listeners what StockTwits was doing?
yeah, look, my background is basically in investing, right? So I did the usual banking, investment banking, and private equity in New York, and then INSEAD and Cisco's VC team in the Bay Area. Then we're invested in, but then in WhatFix, actually, who's now a very large organization and has scaled very nicely. And then I joined StockTwits through my good friend Howard Lindzen, he's the first investor in Robinhood, first investor in eToro, early and done even in India. And he's the founder of StockTwits as well, where he did a deal with Jack Dorsey to create the finance version of Twitter. And so he invented the cash tag a long time ago. And he was the first person to really make the democratization of investing really a popular, real thing, right? A real trend. And so I worked as first the India head and international head first, and then I moved to the president and COO and a chief strategy officer as well in the last 2 years. So yeah, that's a brief background there, Utsav.
What a transition. We can probably dive deeper into some of these title changes as well. What was that like?
Yeah, look, so this was my first real operating role, right? And so I got to understand what it's like to scale businesses and this is basically a media business per se. So I built the social media franchises with my team from scratch. I did large deals with publishers and brokerage firms and things like that, right? So I think there's a really good hands-on operating experience at the more VP international level. And then I also did a large deal with Times Group and Times Bridge, which unfortunately didn't pan out because of external situations that are not tied to StockTwits. And so that would have been a massive thing for StockTwits, where it would have been a part of Economic Times and a massive franchise very quickly overnight. They were going to come in our Series B, which FTX led, because GameStop happened on StockTwits during those days as well. And FTX led our Series B and wanted to acquire StockTwits, and they wanted to be a part of the journey and have a very social trading experience as part of StockTwits. And so that was the India journey. And then moving over to a global role, I worked US hours sitting in Singapore, running a New York-based franchise. And, from Singapore was a huge time zone challenge, but it was fun. We kind of divested the brokerage business and went all in to scale what I call a media tech platform. And that's where, you have the hack of a publisher, get the ARPU of a subscription product, but then eventually a brokerage transaction firm as well. And so that's when I left. I think, now they want to go in a bit different direction around video and TikTok of finance and things like that, right? And so it was a good time to leave as well. And so, yeah, it was a fun 5 years where I learned a ton. And now I'm extremely deep in the retail investing landscape. So it's a good spot to be.
Early on, did you have like a brokerage business at StockTwits as well?
Many, many times. So our series, so Howard is the first check in Robinhood. So he got Vlad to integrate to then have Robinhood be available via StockTwits. So Robinhood, their first, several, probably 100,000 or so users came from the StockTwits community. So every VC firm said, hey, why are you getting marketing dollars? You should have your own brokerage. So StockTwits raised a Series A back in, I think, 2015, 2016, with a thesis of building a brokerage. And this new app was like, I call TikTok or Instagram stories meets Robinhood, but it was way too early, number one. And two, every brokerage went zero commission in the US right after that. So then they got kind of pushed away and kind of shelved. And then again, what happened is that we raised a Series B after GameStop and FTX. So we had the same license, except we rebuilt brokerage inside the product itself. And then because of various reasons and strategy changes and all that, after SPF kind of is no longer in the ecosystem anymore, as we all know, all those changes happened. The math to build a brokerage and the fixed cost P&L wise is very different, right? And it's just a very big challenge from a regulation perspective, team bandwidth perspective, and things like that. So now it's a pure media tech business, I would say, which is a great spot to be in.
It's interesting you bring up Vlad, because he likes to talk about like this $1 trillion, this intergenerational wealth transfer that'll amount to trillions of dollars in the US, elsewhere in the world too, and how he's now reorienting the Robinhood business to, be in position to take advantage of that. Is that, and you said you like, tracking the retail investing space. Is that something you think about as well, like super long term?
I'm not as fortunate as Vlad, where I don't have a business that's 100 billion market cap. And one, and two, he's already won the active trader. And that's like the key, is that what he's doing, he's changing his mindset from the active trader to now the more passive AUM transfer that's going to happen over time. So he's been making acquisitions as well that also strengthens him with the perps and the futures for crypto, but as well as for the long-term AUM game with with wealth management and all those things, right? So he's playing a completely different game altogether. But in this industry, kind of where I'm the most passionate and where I think is the most fun and what I think is the most opportunity is around the active trader. Because there was this thesis that retail is dumb and all, and it's not untrue, but it's a super nuanced question, right? I know it's you're very passive and very long term, right? But like, man, I'm very active, and I've learned through the StockTwits community and from being that ecosystem from the Cisco days. Like, people in retail do very well, right? And so like I'm in discords with like people now with like normal people with normal desk jobs who've made millions of dollars in this latest.
That's a very small percentage, right? SEBI put out this number in India. It's not a lot. Like, I mean, F&O is a place where you go and lose money basically in India.
So yes, right. And in fact, I actually did a big campaign with ShareCon to help amplify that point. In fact, right when that whole campaign came out, after SEBI launched it. The nuance is that is also like very, that's also India #1. So I think India is not as far along in its retail education journey as the US. So I have a more US context that I was speaking to. But for India, I think it's just a law of large numbers. There are people who are getting it right. And what's going to happen is that as people learn, as they go through cycles, you will see the same trend happen as what happened in America. Now, it'll be different products, different strategies, but basically, for example, the best example, right? If you're very bullish on HDFC or Reliance, you can buy long-term call options instead of buying the stock. People do that, right? And your returns will be a huge multiple of if you just bought the stock, right? And so that's the simplest example that I give that I've seen people really crush, right? And as long as you're in a general uptrend, right? The risk is really not that crazy. What is crazy is the random punters who buy weekly call options and things like that. That's where you will see like incredible losses in those things. And I think that's what drove a lot of the volumes in India, which led to the recent the recent ban and the losses, but then also the ban by SEBI, where now it's much harder to trade F&O and all those things, right? You need more money, more contracts you have to buy, and all those things. And so they've done a great job of being very active and kind of forward-looking how they think about regulation for India. Yeah.
We've seen the GameStop movie or the documentary, I think that came out on Netflix. But tell us your version of it. How was...
So there's 4 of them that I've seen. I think 1 or 2 mention StockTwits, and unfortunately 3 do not. Our PR game in those days was different. After I kind of came on from the the more leadership role, we hired a PR firm, and so things are different back then. But yeah, so how it happened is that Roaring Kitties, right, has a StockTwits account. He was very active, and it started to blow up. It would show up on the top trending bar on StockTwits, which is the most used feature. Andrew Ross Sorkin, for example, on CNBC in the US, like about 2 months ago, organically, no PR attention, after a commercial break said, Opendoor is the top trending stock on StockTwits. And GameStop was there for like 2 months before going over to Reddit and Wall Street Bets and all those things, right? And so, Wall Street Bets shouldn't even exist, frankly. Like if StockTwits really nailed social and community, people would have stayed on StockTwits and really owned that full experience. And so that's what happened. And then from there, it was a freaking party. I think everyone knows after that what happened. I think the whole world followed the trend. But from my experience at StockTwits, like we saw the users, like I've never seen growth like this. The whole company stopped what they're working on, and it was totally up to just make sure we, the products and the website stayed up and we could absorb the traffic and the scaling worked and all of that. It was a completely different situation. The CEO was on every media podcast, TV all the time in those days. And so it was nuts. And so, yeah, it was a fun time to be alive. What I've seen from then is you saw a massive spike in global adoption in retail. And that obviously tanked, but it didn't tank as much as but then as much as the starting point. So we're at a way higher spot than we were before. I think now with the latest bull market, that's also now trending upwards again. But we're still not at the peak GameStop back in those days. That was a whole different game altogether. So
how did that story end though, Shiv? GameStop?
Yeah, I think we all know how it ended. I think what's the funniest thing now is it's now back in vogue, GameStop. In the micro communities on FinTwit and StockTwits and all of that. Like after years of going down, it stopped going down, and stocks have to stop going down before they start going up again, right? So from a whole technical chart pattern perspective, and the news headlines are not turning positive but for GameStop. So I wouldn't be surprised to see a kind of a micro squeeze in the next 2-3 months if this global bull market continues here, especially in the US.
Tell us your views on crypto. You did crypto twits as well, right? I think in 22.
Yeah, we launched crypto Twitches last year. In fact,
I might
summer
add,
of last year. Yeah.
After crypto, I mean, we'd love to hear your thoughts in prediction markets as well, because from afar, you can only tell so much.
Yeah. So for crypto, look, I think
we're going into deep gambling territory now.
Oh, I love it. This is like my next gig I'm probably going to do is exactly like I believe the world is getting more degenerate in a good way, not less. It will never get back to be more conservative. There are going to be more and
Don't
more.
tell me you're setting up a prediction market desk in Singapore and like.
No, but you're not too far off. Anyway, so
go first and then we step into prediction market territory.
Yeah. So for crypto, look, I think everyone knows that the current regulation in the US, the current government in the US is very pro-crypto, right? So I think that's been a massive tailwind to finally getting institutional adoption. And the ETF launches in the US by BlackRock and all the other providers have been a massive tailwind. Now, the mindset is that if you're a private, even Bank of America, by the way, who has a very large distribution network in wealth management across the country, similar to Access in India, but then as you know, it's right. And so they're telling clients you should have, call it 5-ish% exposure, right? So like, say what you want, like it is here. I was just at the Breakpoint Solana conference in Abu Dhabi a few months ago. The usage, the community, the developer ecosystem is all freaking real. And it's happening, and it's probably here to stay. The challenge that I see is that token economics are not the same as buying a stock. That's why you've seen proxies to people who like proxies to crypto in the public markets, not MSTR and those guys. That's a whole different concept, not the DATs. I'm talking about like Bitcoin miners and people who are exposed to crypto but who have their equity listed in equity markets. I've seen those stocks perform better than crypto projects who may have amazing fundamentals. And that to me is very irritating. And that's a challenge that I see in the space that just has to get resolved at some point, right? Prediction markets. I actually did a massive deal, Drew, with Polymarket. In fact, right, kind of in the Q3 or Q4 of last year, right? And so their StockTwits' official prediction market provider for the year. And so I know both teams extremely well. I think they're both very different. I think
other one is
both 𝐞𝐞𝐰𝐬, yeah, exactly, right? And so they're both very different, different strategies and different ways of thinking about the world, but they're both very talented and very aggressive. And I think they're both determined to make sure this is a real asset class. Now, there's two schools of thought, and I think we should debate. I won't share, my take, right? One school of thought is that this is basically a pure form of gambling, right? And you're effectively gambling, and you've moved the Dream 11 DraftKings kind of model into live events and weather and politics and sports and, of course, finance and stocks, right? The other school of thought is that this is a real science, right? And while I'm so deep in this industry, I can see both sides. But I think for most people, I'm leaning towards the former, right? And I think, but that doesn't mean it's bad, right? I think as you mentioned before, gambling is here to stay. It's coming in different forms, different shapes. Odds are changing. If you have certain insights and certain research or certain, whatever, I think then is it really gambling? Is it really taking kind of calculated bets, right? And so I think the gray area to this is the main point, and it's definitely here to stay. So I think everyone should just get used to it. I think what's really cool in this is the data impact that comes from it, right? And so now, like, these guys both platforms have massive partnerships with mainstream media, and people use prediction markets to see election results, and it's insane. It's crazy.
Insider trading, there's one account which is linked to all of these Trump announcements, always making huge profits. Like insider trading must be, happening.
100%.
It happens in all markets, but including private markets, public markets, also.
Yeah, currently, if you look at equity markets, if I were to show you a bunch of, acquisitions that would have happened recently or announcements that would have happened recently, the volume that's come in, you can see it on the charts of people who had some sort of clue. I think it's insane. And I think tracking all of this has become extremely hard, with the complexity of ways to hide it and all of that. And for prediction markets, I just saw a headline recently, headline recently, which stated that I think they tried to track insider trading, but again, you're only as good as your algo, and the systems are not caught up yet. They're brand new systems. The processes are brand new. But both these companies are very small companies, by the way, right? They're very lean teams. They're not massive. They don't have 500 people compliance departments yet. So I think we're in early stages of all this developing. And right now it's a party free for all in the US, given regulation and where things stand. So I think all those things you're saying are probably phase 2 once you've hit more critical mass and adoption and even more mainstream usage.
Yeah, but NYC investing in Polymarket, I think that was a big one. And he was rated a year before that. So pretty insane what this guy could do. But
that's right.
I saw a Twitter project online where somebody basically had an instance of CloudBot running, gave them, I think, $1,000 to trade on global markets. And I think it ended up at $3,000 or something in 2 days. World of AI in trading, like, does it give you an information or some sort of advantage if used properly?
100%. In fact, I'm actually kind of working with a startup now who's doing exactly that in India, who's building, AI agents to automate trading. That's literally that's where this industry goes, 100%. I think why it's so useful, by the way, is it takes out the human emotion from your process and you can stick to systems, right? Like if you quantify, right, like, I only buy stocks in uptrends with positive relative strength in sectors that have momentum, you're gonna make money. And if you have a stop loss of like 7% or whatever, like it's really hard to not make money here. And right now, if you would have used some sort of algo or AI or just anything, right? Like, if you see the moves that are happening in SanDisk and Micron, they've gone up like 100% in the last 3 months because of shortages and memory and things like that. Even silver, for example, is going vertical, as we all know, right? So I think the moves you've seen in equity markets the past 3 months, like all that is real. And if you were to buy options, I mean, I'm surprised not even more than that return, right? And so I think, all this is here. I think, to be clear though, like I've seen various market cycles in equity markets, and we are in a bull market. This party will end. And, the fear that everyone has in this industry is that it ends for a long period of time. We've historically seen periods of the market where there's no action, there's no entertainment. We're not talking about it here. You're not having me on the podcast today, for example. In these markets where it goes sideways for 10 years, 6 years, people get bored. They go focus on cricket and sports and politics, whatever else people care about, right? And so that is a concern at some point. And I think that's what this industry is really scared of. In that environment, very few algos will consistently outperform as well. So as long as you're in a bull market, I think people have to optimize returns in the best way they know how. When the party ends, we'll all kind of know based on technicals and chart patterns. And that's where I think you have to change your strategy and be less aggressive and kind of adapt to times.
Close out with precious metals, a topic that we've been discussing. Let's hear Shiv's take on precious metals as our closing question. Gold, should we buy copper? What Chamath is saying might be 70% short and there's no replacement for it.
I've gotten I can't tell you how many calls I've gotten on this topic in the past 3 weeks. I am not long. I feel like I missed the trade and I'm probably wrong. I think they go higher in the intermediate term. If you look and the reason why I think that is not just based on, random thoughts, right? I think that because if you look at the call option activity happening from people that matter who are putting large amounts of money in play, they're taking extremely bullish bets for June price, for the June strike and the fall strike and Q3 March strike even, right? And so if you follow big money, which I truly believe in, I think that's historically worked, it is still very bullish. Now, they can change on a dime, right? The main catalyst for all this, right, is beyond the, it's not like it doesn't trade like a stock because there is a whole commodity element to it. And if there's all these use cases of people who now need to lock in prices and do various different things, right? And so, oh, there's the daughter, there's my son. So, in this Batman towel. Sorry, Murat, can you please take him? Sorry, guys, 1 second.
No,
I need you to.
not a-
Yeah, sorry.
Dude, that's a very nice chair.
Thank you.
Oh,
So
good tune.
basically, so I think like generally, I think trend is higher now. I guess one of the largest catalysts, which is very controversial, but if you've seen the data that's driving gold adoption, is hoarding by Chinese, right? And I think, what stops that? Is there any change in that? Is the pace of that buying interest, going to slow down, right? I mean, there's all these complexities there, but generally it is in an uptrend. I'm actually very long copper as well. So if I was buying that, because I missed the silver trade, the gold trade, I think the others play catch up, and I think that's where the cycle goes. So.
And so much to uncover in this topic, like currency debasement. Like, I mean, everyone's like Ray Dalio is making his own commentary since a while now with the Changing World book and this thing. But Shiv, thank you so much for coming on the show and giving us your time today. I think it's time to go play with the kids now.
Cool. Thank you, guys. Good to see you both. Take care.
Thanks. All the best
Cool, thanks for
what
having
you're
me.
doing. Thank you.
Cool. Thanks, Drew.
All right, listeners, that's it from us today, and we'll see you on Friday. Thank you so much for joining us. Bye-bye.